Hello, everyone. My name's Chris, and I am the franchise director here at Source. And I'm going to be taking you through the webinar today, which is property still a good investment for 2023? So without further ado, let's get cracking. So you'll have heard some really mixed messages about property. And if you've been listening to mainstream media, then unilaterally that message that they're giving you is it's a bad message about property. They're very focused on the negatives that are happening in and around property at the moment. Obviously, there's the wider economy as well, which plays a big part as to whether you invest in property. There's the interest rates, there's inflation, there's the cost of living crisis. And then on top of that, we've got statistics that are coming out about the property industry. And all of this paints a very, very negative picture on whether you should be investing in property right now. So what I want to do is I want to look into this in a little bit more detail, because I think some of the messages that are given out have got far too negative a spin on them than they warrant. So, for example, one of the messages that the media gives out that really sticks with me is about how landlords are being squeezed. Now, interest rates have gone up. Everybody knows that interest rates have gone up, and that means that usually mortgages are going to go up as well. I mean, you can be on a fixed rate, but usually if you're on a standard variable rate, your mortgage payments are going to go up. And that's what they're talking about when they're saying about landlords being squeezed. Now, my issue with that is interest rates have gone up by a couple of percent. Now, if the difference between success or failure for you is 1 or 2%, then you probably shouldn't be investing in property. And in fact, most landlords, I think nearly 60% of landlords have only got one property, which suggests that most landlords have become landlords by accident. You know, they're accidental landlords. And so they haven't looked at that property that they're renting out and thought that would be a good rental property. I will buy that property specifically for investment. It means that in most cases, they've actually just decided to do it for, becoming a landlord in a very easy way, not as a professional who has taken a look back, analysing the deal in, infinitesimal detail to decide whether that should be their next property investment or not. So is all the doom and gloom true? That's what we're going to look at today. What would we do at Sourced if we wanted to build a property portfolio starting right now? So this is a little bit of a clue as to the three different ways that I'm going to be looking at property and whether it's the right thing to invest in right now. What would we do if we were scaling a portfolio right now? So we already own a portfolio, we want to build it up, we want to scale that portfolio. And what would we do if we were developing? So if we were doing big projects right now, and in fact, we are doing big projects right now, just to be a little transparent with you. So first of all, the economy plays a huge part in this. So what is the economy doing? So this is the chart from the Bank of England, and this is all about inflation. So inflation currently sits at 8.7%. This is the most recent chart that I could find from the Bank of England, but it is a month or so behind. Inflation currently sits at 8.7%. And the target for the Bank of England, as you can see towards the bottom, is 2%. So their target for inflation should be 2%. Inflation is too high because of a number of different factors, which we don't need to get into. Let's just look at the effect of it. And therefore, they raise their interest rates. Now, again, this is the latest chart that I could find from the Bank of England website. However, it is a month or so behind because interest rates now sit at 5%. They've gone up another 0.5%, so they're now at 5%. So that 5% determines the cost of borrowing money across the country. So if somebody's going to lend you money, they're going to charge it out at 5% plus a fee for themselves. So mortgages now, I think just the other day, the first mortgages on a 5-year term that were charged out at over 6% has now become the norm. So mortgages have gone from what were 1.5, 1.7. I'm fixed at something like 1.99% on a 10-year fixed on my home. But now it's very, very difficult to get low-cost mortgages because they are becoming more expensive because the interest rate has risen. The interest rate rises because of inflation. It's the main mechanic that the Bank of England have in order to reduce inflation. They're putting up costs, they're increasing costs, they're trying to hurt your wallet, the amount of disposable income you've got, so that you decide not to spend money. And if you decide not to spend money, there's less competition for products. And if there's less competition for products, the price of those products should come down. And that is how inflation gets reduced. So this is happening right now. Let's have a look at the forecast though, because the Bank of England have been quite aggressive, especially in the last month, in order to raise those interest rates by doing it by 0.5%, because they can go up by smaller increments than 0.5%. But they went up by 0.5% because they really need to get inflation under control. It is 8.7% currently. It was 8.7% in the previous month as well, which means that it hasn't moved. Now, their forecast, if you look here, all the diamonds are where they predict that inflation will go. By 2024, by Q4 2024, we should be back down to about 2% inflation. And that is an important factor, which we will look at a little bit later on. Now, one of the other things that we need to consider when we're thinking about property investment is where else we can invest. So I thought I'd look up a very popular choice for investing money, which is the FTSE 100. So I looked at the FTSE 100 and I did it on the longest term, the reasonable longest term track. And that's over 5 years. And you can see over 5 years, the FTSE 100 has actually gone down by 1.29%. So the capital value, the capital appreciation that you would have by investing in something like the FTSE 100 will be absolutely nothing. In fact, ever so slightly negative. Now, I've also worked out, which I can't do here, but I did do when I was looking on Google, the lowest point and the highest point over this 5-year period. And the lowest to the highest point in this 5-year period is something like a 30% increase. So just 30% over 5 years. And that's if you've timed it absolutely perfectly, which people try to do, but not many people are successful at. What I also looked at was the yields that are generated by companies in the FTSE 100. Big companies, FTSE 100 companies are very popular investment vehicles because of the stability of those companies. The bigger the company, the less likely they are to fail. And therefore you would lose all of your money, because when you invest in stocks and shares, obviously you have no security whatsoever over your shareholding. So I had a look at the top yielding performers within the FTSE 100. And here you can see the expected yield and the gain or loss year to date. Because I guess what you're looking for, especially when you're competing with investing in property, is you're looking for something that not only increases in capital value, but also produces a good amount of cash flow for you. So looking all the way down the chart, there's only the ones highlighted in yellow that have actually got a positive capital value and a positive cash flow. And looking all the way down, you can see here that BT is the best performing in terms of cash flow, but still we're only on a 9.7% and a 6% cash flow. That 6% cash flow is really not going to set anyone's world alight. But that's why they're such a popular investment tool, because like I said to you before, most properties are owned by a landlord who only owns that property. So they're not professional investors. So they're probably making a yield from that property that is comparable to 6.26%. I know one of our franchisees who I'll name and shame him, Jerry from London. He recently secured a deal where the cash flow, the yield from the property was 14%, and that's net, 14% net. And that property, which is going to surprise you, I think, was in central London, because of the stuff that we've shown Jerry, because of the way that he negotiated and the way that he structured the deal. So that kind of yielding property is available in central London or anywhere else in the rest of the country. So now let's have a quick look at the property market. Well, this is the kind of stuff that you will have seen. This is what you'll have heard, that property transactions now, in comparison to this time last year, have almost halved. And, I can't argue with that. That's absolutely true. When you look at graphs like this, when you look at this kind of timeline, that data is absolutely accurate. But is it reasonable? is it reasonable to focus on that and to say, well, property transactions have halved? Because what they're trying to do is they're trying to scare, they're trying to sell newspapers. They're trying to make you watch their news channel by scaring you, by taking the data and twisting it in the most, for them, air quotes, engaging way possible. Now, in terms of house prices over that time, you can see that house prices, we've got data here since 2006, have consistently gone up a little bit faster since COVID, and then we have experienced a little bit of a dip. However, from February 2018, which is a 5-year period, so I'm using the same, roughly the same timeline as the FTSE data that I showed you, February 2018 to March 2023, property prices have, as an average, gone up by 26%. So gone up by 26%, as if you timed the market almost perfectly, as in the example with the FTSE. But obviously, you'll have chosen your property, the property that you invest in here, with the intention of making a cash flow from it. So you'd have experienced and you'd have benefited from that 26% increase, and you would have made cash flow from the property. Now, this is a really interesting statistic. As you can see, I've got this from Zoopla, which compares the decrease in property transactions from earlier this year to a year previously versus the number of property transactions since before COVID. And to interpret this graph for you, the number of transactions year on year has gone down dramatically. The number of transactions between now and pre-COVID times is almost identical. So I think that tells us something. Why are the media not reporting that property transactions have returned to the same level that they did before COVID? That would be, you know, that's just as accurate a headline, but they don't do that. They focus on the negative because that means that more people watch them because they're feeling fearful about their investment decisions. So my name's Chris. I'm the franchise director here at Sourced. The reason that I'm talking to you about this today is because, you know, I have a bit of a bugbear, to be perfectly honest with you, with the way that media report stuff. And I want to make sure that as many people as possible know the truth about property investing and whether it's the right decision for them. So I've founded, grown and run many different businesses over different sectors. I've been involved in property for over 10 years, getting on for 15 years now. And I've been involved in deals from £55,000 up to £150 million. I've executed lots of different strategies myself, which is why I'm comfortable talking and explaining the situation and explaining my experience and our experience across Sourced about different property strategies. And now I run the franchise business. So I'm, you know, our intention is to help our franchisees. So we're a franchise-based business. We have 200 franchisees across the country. They've decided to join us because they want us by their side, helping them grow their property wealth, whether that be they're just starting out or experienced developers. We sit by their side. We give them a package of goods to help them make the most out of their property developing and therefore grow their property wealth faster by working with us than doing it on their own. The way that we've done that is we've created an ecosystem, and that ecosystem starts with the franchise. So like I said, as franchisees, these guys come on board with us. They have access to this package of goods that we give them, and that helps them build their property wealth faster than doing it on their own. If you go to our website, you'll see these 4 brands that are all laid out for you. We've also got Sourced Property, and that's where investors go to find property deals or to find information about property. And I'll talk a little bit more about that in just a moment. We've got Sourced Capital at the bottom of that diagram, and Sourced Capital are the funding arm. So not only do we teach our franchisees how to find properties, not only do we support them making decisions and structuring deals, not only do we give them property leads, but we can also fund their deals for them. And then on the left-hand side, we've got developments, and developments are our projects, the projects that we're doing here at HQ, because not only do we teach other people how to make money out of property, we also do it ourselves, and we're working across the country in a number of different strategies. So we have our finger absolutely on the pulse of property strategy, investment. So I think the logical question for me is, what's your focus? What are you looking at? What do you want to do from property? Are you starting? Are you scaling? Or are you developing? And they're the three areas that I think most people, when they're investing in property, fit into. Because if you're starting, your needs are going to be very different from if you're scaling. If you're scaling, your needs are going to be very different from if you're developing. And therefore, we can break down and look at these three different types of people and how they're growing their property wealth, and look at what the situation is for them. So first of all, logically, let's start with starting. So if you're starting to build your property wealth, starting to build your property business, there's a number of different ways. And the first thing that we always look at is cash flow. You've got to consider cash flow. You need to make cash flow from property in order to free up your time, in order to give you more time to, expand your network, talk to more people, get more deals across your desk, and build your wealth faster. So one of the ways that you can do that is by selling deals to investors. Now, at the moment, there are a huge number of investors who are looking for property deals. Now, the reason that they use sources is because they don't know how to find these deals for themselves. So we teach our franchisees how to go through this process. Now, at the moment, because people have been discouraged from investing in property by the information that they're hearing on the media, there are fewer people out there that are choosing to spend their time making money out of property. There are fewer property sources out there because they think that, man, interest rates are so high, nobody's going to buy. It's not true. Because interest rates are high, and we've seen the evidence based on one of the graphs that I showed you earlier, property prices are coming down. Now, the only reason that property prices are coming down is if vendors agree to drop their property prices. And they're doing that because there are fewer buyers out there. There are fewer buyers out there because everyone's scared about the mortgage cost. Now, that is undoubtedly something that is holding back a lot of people. But if you're investing, I will quite happily take the hit of a higher mortgage payment for the next 2 years if I can get a decent discount on buying a property. Because the higher mortgage cost is not going to be around forever. As you can see by the Bank of England prediction, the inflation rate they're hoping is going to come down by the end of 2024. Now, if that comes down and then interest rates come down, then mortgages come down. And then you refinance onto a lower cost mortgage. But you still bought that property at a discount because people are scared of buying right now. It's absolute logic. It makes total sense that that's why good investors that understand the market are still buying properties. And it's only the sources that don't understand how the big picture fits together that are walking away. Now, another way that you can start out with property is by doing something like rent to rent. Again, this is a cash flow strategy. So as a cash flow strategy, you might choose to take on a couple of HMO rent to rents or service accommodation rent to rents and have them running by the side, producing that monthly cash flow for you so that you can walk away from your day job, or you can supplement your income to such a point that you're able to then spend a little bit more time finding the bigger property deals that you're going to add to your portfolio and own over a longer period of time. Now, you might not have a huge amount of money. This is a great way to build that pot of cash that you have. You buy a few rent to rents, you have them operating, you build that pot of cash, and then you can start to invest in bigger deals, the kind of deals that you're going to add to your portfolio. And if you're starting out, that might be another option for you. So if you've got a bit of money already, then you could start to do small flips. Now, why small flips? What if you've got a big pot of money? Well, you might have a big pot of money, but if you're going to borrow money from a lender in order to do property projects, you need experience as well. So if you're just starting out, you won't have that experience, even if you have got the money. So there's a number of different ways to solve that problem, but let's just keep it really simple so that you understand how the situation is currently for people in these three different situations. Here we've got a couple of examples of some franchisees that have done exactly that. So this is Sav. Sav is selling upwards of 15 deals per month. And the kind of deals that these guys are selling are £4,000 or £5,000 a pop. So you can work out for yourself how much cash flow Sav has created by selling deals and focusing on cash flow to start off building his property wealth. And if you look at the bottom of the screen, you can see that he's now working on a commercial conversion. Now, he doesn't have the experience to do that commercial conversion on his own. So actually, we at HQ have decided to joint venture with him, where we're paying those upfront costs. We're borrowing the rest of the money from source capital. And then at the end of that project, when we refinance or when we sell that commercial conversion, we'll split the profit between us and Sav. So a great example of somebody that's done exactly that. Here's another example of one of our other franchisees, Shahid, who's based in Manchester. And Shahid has gone about building his cash flow in a slightly different way. So he specifically focuses on rent-to-rent serviced accommodation and deal sourcing. So he secures a huge amount of rent-to-rent serviced accommodation deals. He'll keep some of them for himself, creating that cash flow for him. And the ones that he doesn't want to keep himself, he sources on to investors. He's secured over 200 rent-to-rent units because of joining us, because of having the backing of the brand of Source, it gets him through doors that previously would never have been open to him. And he knows that they wouldn't have been open to him because he was knocking. But we've shown him how to structure those conversations, how to have those conversations, who to talk to in the developers that allows him to secure such a huge number of deals. Again, his fees about £5,000 per unit. So you can imagine the kind of cash flow that is being created by these guys. Now, what we do at Source HQ to help our guys sell more deals is we've created an app. It's called the Source Property Investor app. And if you haven't got it already, I encourage you to go and download it from the App Store or from Google Play. Every single day, new leads are downloaded into this app. If you're interested in property investing, then you will get property investment opportunities on your phone every single day. It's by far the biggest property investment app in the UK. And you can see on the left there, the metrics are right in front of you. So you'll get an image of the property, you'll get metrics of the property, and if you click on that property, you get a big description about what kind of investment opportunity that property is. We've also started Source auctions. So if our network of franchisees don't want to sell by the app and having conversations with lots of investors, then what they can do is they can list that property on our auction site, Sourced Auctions, and then we can sell it for them, and then they'll get their sourcing fee paid directly to them within 7 days. So that's starting up. Is it right at the moment that people should still be starting property investment businesses or trying to build their own property wealth? Absolutely. It 100% is. There is still the demand, there's still the margin in property deals, and there's still the opportunity out there across the country in order to build your property wealth. So now let's look at scaling a property business. So these guys are going to be, they might have done one flip, they might have done one refurbishment, they, might have a little bit of experience, but don't really, haven't turned it into anything of a bigger scale. So the first thing that these guys should be doing is deal layering. They should be stacking the deals on top of each other in order to create as much income in a year as they possibly can. Because when people get into property, they might say, well, we'll say to them, what do you want to achieve? And they'll say, well, I want to make £100,000 a year. And they might think, well, I've got to be a big developer doing hundreds of units in order to get £100,000 of income per year. But actually, if you have a flip that creates you £33,000, then all you need is 3 of those flips. So you just manage 3 flips and there'll be overlap from one to the other, but you get those flips completed within 12 months and you've made £100,000. There are many different ways to hit the targets that you might have. And it's only when you come to somebody like us, a company like us, who are experts in putting that together, that you'll see what your options are. Because otherwise you might, if you don't know, you don't know. So coming to talk to us is absolutely the right way to find out what your options are. Of course, you could look at larger deals. So instead of doing 1 flip or 3 flips of £33,000, you could do 1 longer term flip, which is going to be 50, 60, 70, £100,000 on its own. And that makes absolute sense, because if you get into larger deals as well, that means you're preparing yourself to move up strategies. And if you're moving up strategies, what we're talking about there is moving into commercial conversions on your own, or moving into new builds, and that the first new build that you do might just be one property on its own, or the first commercial conversion might be quite a small retail unit that was on an high street that you're going to turn into flats. So moving up those strategies is the right thing for these guys who are scaling to do. And again, is that the right thing to do right now? Well, again, looking at the data, yes, it's going to be slightly more expensive if you're going to be borrowing money. However, if you're creating units for first-time buyers, then that is absolutely the key to your success right now, because the number of first-time buyers buying has gone from, I think it was about 8% of total property transactions. It's now about 35% of total property transactions. There are far more first-time buyers in the market than there are existing owners in the market. So if you're creating products or units for first-time buyers, that would be absolutely key to this, to continuing your scaling up. Again, some franchisees who have done exactly that. So this is Phil. Phil had done the occasional flip and he wanted to scale up. So guess what? He came to us. We funded his project for him. He made 40 grand from it, and he's rinsed and repeated that formula again and again and again, because these properties, after you've taken our training, are not too difficult to find. Here's another example of a franchisee. This is Nigel, and what Nigel does is he takes normal residential properties and he creates HMOs out of them. He then rents those HMOs out to the NHS on a guaranteed tenancy, and he makes a very, very healthy margin from those properties. I think he's now on his third loan and his fourth HMO that he's created, following exactly what we've taught how to do on our HMO course. And again, he's rinsed and repeated that strategy. So now looking at developing, looking at the guys that are doing the bigger projects. So the first thing that you need to take care of when you're doing developments is taking care of cash flow, because it's very easy to think that you're going to make it all the way through a development. But if your development gets delayed slightly, have you got enough cash flow in order to get to the end of that development and then make the profit from that development? Because the first time that you get your profit is right at the end of that development. So all the cash flow strategies that we have are just as relevant for people who are developing properties as for people who are starting out in property. Because what we find a lot of our developers do is they start start a couple of rent-to-rent properties in order to supplement their cash flow, or they start trading properties on or land on in order to supplement their cash flow. It's the same. It's amazing how these things all come together. Now, the developers also need to start managing their deals, because again, they need to be stacking them up. And as a developer, your role is far less boots on the ground every single day. You are managing a business when you're a developer. So again, we have development courses to show our franchisees how to take that next step up into managing deals and taking a step away from doing the painting or whatever it might be, and how to manage multiple sites. So here's Jamie. That property on the right hand side there, that's a CGI from Jamie's first deal that he did with us. He knocked down a property, he rebuilt one property. So he just converted a bungalow into a 4-bedroom house. But from the bungalow, there was only one wall that was still standing when the rest of it had been demolished. So that was a small development. 100% funded by Source Capital. He's currently on his 4th development, and now his current development is 22 new build houses. So he's gradually, like we were talking about earlier, he's gradually scaled that up. He's gone from 1 new build property and he's scaled it up to 22. And he'll continue to grow, and he'll continue to increase his profit margins, and he will continue to increase the zeros that are on his profit level as well. So one of our franchisees who's done incredibly well. So we hinted at it again, didn't we? Whatever the strategy, but what about the interest rates? Because surely that's going to play a part. Surely that means that nobody's going to be investing. Surely that means that it just takes all the profit out of the deals that I'm looking at. Well, it absolutely doesn't. Investors right now are absolutely desperate for property deals. we generated, I think I've got a slide on this later, we generated over 400 investor inquiries just last week. Just last week, 400 investor inquiries. So that's well over 1,000 investor inquiries per month for our franchisees who are looking to speak to investors about the investors making an investment. Like I said to you before, target flips at first-time buyers or target units at first-time buyers. That's another reason that commercial conversions are so popular at the moment, because you tend to be creating flats, and flats are perfect for first-time buyers. So yeah, target first-time buyers and developments. Now think about this in the longer term as well, not just the doom and gloom that is reported to you from the Financial Times or whatever other newspaper or news source that you use. If you take a development out now, which we have taken developments out very recently. By the time that you're refinancing that development, we should be in a state of lower interest rates. So it would be far less costly in the long run when you're refinancing to then make your money from the refinance of that project. And to boot, the lending that you can get from Source Capital, if you're a Source franchisee, is exactly the same as it was pre-COVID. So think about that for a second. If you're going to take out a bridging loan, and that bridging loan is going to cover you for 2 years, the cost of that bridging loan, if you're borrowing from Source Capital, is exactly the same as it was 2 years ago or since before COVID. But if you buy now, you're in a far stronger position to negotiate a discount because there are fewer buyers out there. I don't think the question should be whether property is still a good investment in 2023. I think a more pertinent question should be, why are you not investing in property in 2023? This is an absolutely brilliant time to be investing in property. So what exactly do we do? How do we help our franchisees get through and make these kind of decisions? So we have a hybrid training structure. So we have online training and we have face-to-face training. Every face-to-face course that we do is backed up by online training to make sure our guys have full access to the knowledge. And if they've got full access to the knowledge, they don't have to wait for the next course. They don't have to come to HQ to wait for the next course. They can access that information whenever they need it. Excuse me. Now, the first thing that they'll do is they'll come on an induction day. And the induction, it's over 3 days. And we'll introduce them to our systems and processes, and we'll talk to them about deal sourcing, and we'll talk to them about the process of deal sourcing and show them how easy it is that they can start to make money in a relatively short period of time. We then have quarterly summits. So a lot of the pictures here are from the last summit that we had, where we invite all of our franchisees to come. This is pictures of all of our, well, not all of our guys, but some of our guys. And we go through a market update. So we explain where the opportunities in the market are. We explain how the market's changed. We talk to them about the media messages that are out there, but actually we look at the data and show them what's actually happening now and how their decisions should change based on the data that we're getting. For example, we mentioned serviced accommodation a little while ago. There's a big change happening in serviced accommodation, which I don't hear a lot of other people talking about. We were talking about the change in serviced accommodation about 6 months ago and telling our franchisees what is likely to happen and allowing them to plan their business, plan their wealth. Because if they commit to something like serviced accommodation and the rug gets pulled from under it, then they're potentially in trouble. So we have this conversation with our guys every single quarter at the Sourced Summit. Our support team put on support days as well around the country for our franchisees. So not only do we have face-to-face training and online training and the Source Summit that we do quarterly, we also put on support days around the country. Our support team, in fact, go out and visit our franchisees on a one-to-one basis, if need be. But also, we'll put on support days around the country to get our guys together so we can talk about property. And this is an image of the online training. And this is my online training portal. So you can see I haven't actually taken any of the courses. It would look very different from our franchisees, but I haven't taken any of the courses because I did most of the courses. and most of the videos on there are me talking you through the strategies of what you can achieve through property. So the support structure that we have, it's a very structured support process that we have. Now it's unlimited. That's the most important thing that you need to understand. We put on a link to your support person's diary. And if you want a meeting, you click on that link and you book a meeting in with your support person. The support person doesn't yes or no or approve it or anything like that. If you want a meeting, you book a meeting and that meeting goes into their diary. So like I said, on the left-hand side of the screen there, the first thing that you start off with is the induction. And shortly after the induction, you create a 12-month plan. So we have a 12-month plan, which is based on what you want to achieve in 12 months' time. But then we go into a lot of detail about what you're going to do in the next 90 days. And like I said to you, the source summits are every quarter. So every quarter, you come to the summit and we refresh your 90-day plan. We update your 90-day plan. We see what you've achieved. We see what you need to achieve to hit your 12-month goal. And we stay structured. And also all the support team are there at the source summit to help you create that 90-day plan. And then after that, you'll have a monthly accountability meeting with your support person. But at any time, if you want to book yourself in around that, you can have as many one-to-ones as you desire based on the link that you have to your support person's diary. This is an example of the 90-day business plan. There's a reverse to it as well, which I'm not going to show you because it's not that interesting because it's just a blank piece of paper, really. But this is what you fill in, and this is what your support person holds you accountable to help you achieve your property goals. Now, like I said to you, we also supply our franchisees with property leads. So our property leads are based on properties that are on the market, and then we run them through a number of different algorithms. And if at the bottom of that algorithm, if all the data that we can gather on that property suggests that that property is going to produce a strong return, then they are sent to our franchisees on a one-to-one basis. So any one property lead is only sent to one franchisee, so they have exclusivity over it, and then that franchisee can move that property lead forward. So at the minute, we are producing leads on HMO, new build, commercial conversions, flips, and also rent-to-rent HMO and rent-to-rent serviced accommodation. So a huge number of leads come across our franchisees' desks. And the purpose of those leads is that instead of the franchisee firing up an online portal like Google, Rightmove or Zoopla, and looking through 200 leads, instead of doing that, they can come to our portal, they can come to our system, they can look at 4 or 5 leads, and those 4 or 5 leads have already been pre-qualified by us, making the franchisee's time so much more efficient, so much easier to look through 4 or 5 high quality leads than it is to look through 200 unqualified properties. So like I said, we've got 130,000 investors registered with us. Again, our franchisees have access to them, and we deliver over 400 investor leads every week to our franchisees. Finally, with the funding, we can fund up to 100% of the purchase price and the works costs for our franchisees' deals. And that's done by our company called Source Capital. And that's because Source Capital are based on 70% GDV lending. So GDV, what we mean by that is the end value of the property once the refurbishment or the build work has been completed. So 70%, up to 70% of GDV lending. So let's look at a really simple example to explain how that works. So if the purchase price of a property is £100,000 and it needs £50,000 worth of works, and once those works have been completed, the value of that property is £250,000, that person could borrow up to £175,000 because 175,000 is 70% of the 250,000. So very straightforward way of calculating what you're potentially able to borrow. Now, just for transparency, Source Capital is an FCA regulated peer-to-peer lender, and the way that they would lend you money would be secured against the first charge against the property. So exactly the same first charge like a mortgage company would have, or like a bridging company would have. Now, another what's the word I'm looking for? Another benefit of having a lender in-house is that you are able to get hold of an agreement in principle very quickly, because our sister company, Source Capital, only loans money to our franchisees. So franchisees are the only customers. So if you want an agreement in principle, generally we can get you an agreement in principle within 2 hours. So if, for those of you that are not currently involved in property, if you try to secure a property with an estate agent, the estate agent is very likely to say, I need to see your source of funds. So we can get you those source of funds within a couple of hours to help you secure that property to you before anybody else can get in there and steal it from you. Now, you might be thinking, that's all well and good, but what kind of deals do you actually fund at Source Capital? Well, actually, you can go onto the Source Capital website and you can see the deals that we've funded. But these are 2 agreed deals that we currently have in the pipeline at Source Capital. So here is a very, very grand looking building on the left-hand side. And, you know, let's just cut to the chase. The franchisee contribution to buy and refurbish that building would be 0. So they can borrow all of the money from Source Capital to do that deal. Now, not all deals work out like that. Here's another one. And the franchisee contribution for this one, in which they're going to be borrowing £275,000 plus £36,000 for the build costs. The franchisee contribution to this one is just £3,300. So really reducing the amount of money that the franchisee needs to put in. Now, the way that we organize all of this is through our portal. So this is an image of our portal, and you can see the tiles on there. You've got the CRM, you've got the deal calculator, you've got Workplace, which is our internal communication tool. You've got events that you can book on. You've got partners that we affiliate with, where our franchisees can get discounts. And you've got online training on the left-hand side, the green box at the bottom as well. So this is how we keep everything organized. We've got a huge number of documents as well, which you can access through this portal. And if ever you get a property lead, that comes to you through the portal. You get a notification, which is shown at the bell at the top. And then you have a look at that property. You decide whether you want to take it on. You can move it into your CRM and you can manage that property going forward. If you want to sell that property, you can put that straight into the auctions, and we'll sell that property for you while paying your 2% fee within 7 days. So we've got a huge amount of systemization and automation that you benefit from, that you get access to in order to help you build your property business. Now, you could do this on your own. We've seen people do it on their own. In fact, when I first started, I did exactly this on my own before we started this model. And you know, it was pretty tough, and it cost me a huge amount of money. So as a comparison, if you were going to keep yourself going with salary, if you were going to look at putting your investment capital or getting your investment capital together, paying for startup training, you'd be looking at spending about £50,000. And then for the ongoing costs of running this kind of business, because you need to keep coming on training, because training is expensive. Training is expensive because it helps you understand the current state of the market, the current state of service accommodation or commercial conversions or whatever it is. But the legislation is always changing, so you need to keep coming to training events. If you're going to buy property leads, if you're going to buy investor leads, if you're going to pay for a computer system, if you're going to pay for a mentor to be that to give you that one-to-one support, that can easily cost you about £5,000 per month. A weekend training course is about £3,000 on its own. So the costs can soon mount up. Now, if you were looking for training, you could get training from a trainer. If you were looking for support, you could maybe get mentorship from a trainer. If you're looking for specifically for mentorship or unlimited support, you'll probably go to a property mentor. They cost about, what, 500 quid a month? Training easily can cost you about £25,000 per year. If you're looking for lead generation for investor leads or property leads, they're about 50 quid each. On average, they're about 50 quid each. So depending on how many you want, that's going to add to your monthly costs. If you're looking for somebody to give you property leads, you could go to an agent, but you might have to give away some of your profit if you're going to get exclusivity from the agent. A lender could give you an agreement in principle, and a JV partner could help you if you're looking for funds. At Sourced, we do all of these things. We give you access to all of these things, and how much or how little you use them is completely up to you. And the cost of that for being part of Sourced is $12,999 plus VAT for a 5-year contract with us. It's not a 1-year contract, it's over 5 years, so you only pay that fee once, and then it's £245 plus VAT per month to keep on sending you those leads, to keep on supplying you with that support, to keep on providing those training courses for you. If you're interested in that, why wouldn't you be? Because now is a great time to invest in property. And if you need somebody by your side, there's no better package in the United Kingdom providing all of those things that you can get hold of that is going to help you move your business forward or create and build your property wealth. The way that you can get in touch with us is by contacting us at franchise@sourced.co, or you can use those QR codes that are at the bottom there to book a meeting with either Sam or Jordan and just have a chat about it. Talk to them about it, see if it's the right fit for you, and then we can decide to move forward. We currently have 200 franchisees across the UK. This is a very well-established system for helping people build their property wealth. So I hope this has been informative. I hope you've enjoyed this webinar. Keep an eye out on our future webinars because we do roughly about one a month. And if you need any help at all, please feel free to get in touch with us at franchise@sourced.co. So my name's Chris. Thanks very much for spending the time with me, and I hope you have a really good day.